Thank you so much for joining me today.
Good morning. Thank you very much, Professor, for having me this morning.
Good morning to you too. Now, going through that report, January 2025 didn't look like a very good one, the fiscal position and all of that. I mean, many indicators were in the red zone. What was that about? What happened in January specifically?
Well, if we need to look at that data in isolation, of course, we'll say that we are currently in a problem. But it won't be advisable for one to actually look at that data in isolation because there's always this peculiarity about the beginning of the year. And that's one of the reasons why, if you notice that when DMO is actually issuing a debt instrument, they are more aggressive at the beginning of the year, at maybe like Q1. And one of the reasons why they actually at that position was because at the beginning of the year, you don't tend to start generating revenue aggressively like that. And for example, let's look at what happened last year. Last year, we actually had about 479 billion. That's what we actually used in servicing debt at the beginning of that last year. And our revenue is just barely above that. And at the whole Q1 last year, we generated, I think, about 1.7 trillion. But as at the end of the year, the total revenue generated by Nigeria was about 25.5 trillion. So it tells you that the whole Q1, what we generated was just about 6 to 7% of the total revenue for the whole year. So it means that the way we run our revenue generation is we are always very slow at the beginning of the year. And so it means that Q1, we are always very slow. But when we start getting to Q2 and Q3, that's when the engine will start revving on a higher level. So like I said, if you look at it in a solution, it means that there's problem and there's something that we need to do. And do we still need to do something? Yes, we need to work around that. So it simply means that we are not generating enough revenue to actually service our obligations. Because even if it's just January, the government should be able to actually cover its expenditure at the beginning of the year. And that is what is currently not, we are not actually achieving as we speak currently.
Well, I like that you've already, tied this to something, because looking at federal government's, provisional retained revenue of 483.47 billion naira, that's 69.19% and also 70.40% below the levels recorded in the preceding period and, even the monthly target respectively. That clearly is what you have called a revenue generation problem. Now, what is the way out? We understand the explanation you gave about the peculiarity of Q1, especially January, but what's the way out of this?
Yeah, the way out is that we need to actually improve in our revenue generating capacity. And IMF has mentioned that World Bank also advised us around that. And what they're currently even advising the whole Africa populace is that we need to actually improve our revenue generating capacity. And most of a country like Nigeria, Angola, and other oil producing nations in Africa. And their view is based on the fact that considering what happened in the last 3 weeks, we saw just a decision by the President of the United States. We saw the impact on oil price. Oil price went as low as around $60 level. And when you now look at a country like Nigeria that actually benchmarks its revenue at $75 per barrel. So it simply means that we're already falling short in that regard. And don't also forget that the production, daily production is about 2.07 million barrels per day. And but what we are currently doing now is just about 1.5 billion barrels. So it means that we are already falling short in that regard. So Nigeria needs to actually find a way to improve its revenue generating capacity. And IMF has suggested that all we just need to do is to actually use technology to actually bring a lot of people that are already out of the tax bracket into the tax basket, so that Nigeria can actually improve its revenue generating capacity in that regard. And another thing also that we also need to do is that for Nigeria to actually increase its revenue generating capacity, we also need to ensure that people are having a very good life. Because if people are not actually enjoying, people are not actually making income, there's no way that the government can also generate income from such people. So it means that government needs to actually create an enabling environment for people to actually work. They need to create an enabling environment for business to actually thrive. Because as businesses thrives, it means that at the end of the day, government will be able to generate revenue. Let's take, for instance, look at what happened in the capital market last year. A lot of consumer names, they actually made huge loss as a result of FX loss. But when you look at their performance this year, MTN just released result yesterday. They did over 130 billion, 130 billion in profit after tax. We saw Nigerian Breweries did over 46 billion. Also, international breweries also did about 29 billion. So because companies now are actually doing very well, it means that government also can actually generate more revenue in form of tax. So it means that government needs to work with companies to ensure that they continue to try, create an enabling environment, create infrastructural development that would actually help most of these companies actually be able to be competitive in international market. So if government can do all this, it will actually help in their revenue generating capacity.
That's quite interesting. I would have done a breakdown of, that report, but we don't have all the time. So undisputedly, we're looking at a growing debt burden and dwindling fiscal space. Would you say Nigeria is in a debt trap already?
Well, I would not totally say that, but I just feel that we are getting to a line where we need to be a bit cautious at the rate at which we are actually borrowing. I think the government needs to actually step down on some of these aggressive borrowing, and most especially some of these borrowing from international financial institutions. I think the government needs to start looking inward. How can we improve revenue generating capacity? How can we start operating at a level where our deficit is not so much that we need to actually be always I think maybe local capital market or international capital market to actually borrow money regularly. So government needs to actually work around that, because if we continue in this trend, I think just like what you mentioned, we may find ourselves in a trap, and I don't think Nigeria wants to get to a level where you start begging globally for debt forgiveness.
Right. IMF, just like you mentioned, had also warned that, oil-producing countries face budget pressure as a result of lower oil prices. And we know that this adds another layer to Nigeria's growing fiscal challenges. How can Nigeria sort of navigate this? Or is it a dead end, looking at what's happening globally in terms of that? And number two, maybe if we can do all this together. You also talked about domestic revenue mobilization, and you spoke specifically about, taxation and all of that. But beyond taxation, how can, Nigeria also use that tool?
Well, I think firstly on the oil side, I've mentioned the fact that currently we are already having shortfall in terms of daily production. The budget says that we'll be producing about over 2 million barrels per day. Currently, we are barely doing 1.5 million barrels per day. So it means in that regard, there's already shortfall to expected revenue for the year. And also, when you're looking at it from the angle of the fact that the oil price is even trading below the budgeted $75 per barrel, it simply means that also would have worsened the gap, or increase the gap between the expected revenue and what we have actually budgeted for. So the government, like I said earlier on, we need to start looking inward. Aside the fact that we need to actually generate revenue through taxes, we also need to find a way to start diversifying that away from oil and gas. Because that has so much been more like the highest effect generating aspect to us. We need to start looking at other side, like the mining sector and the agricultural sector, and I feel that there's a lot of potential in this sector, sir, but just that we are not actually tapping it off, and the government has not been so much deliberate about bringing out the best in this sector. If you look at the mining sectors, we'll be seeing that a lot of foreign investors actually looking at actually investing in this sector in Nigeria. But what are the policies of ground? What are the things that we feel that can actually lure them into our market? These are some of the things that the government needs to actually sit down with and find a way to develop a proposal that can actually get most of these guys to come set up in Nigeria. Because enough of actually just exporting raw raw material. We need to get a level where we start adding value to whatever we're actually exporting out of this country, because that's the only way we can actually create employment and actually increase the revenue generating capacity of Nigerians. And on the side of your second question, please, again.
We need to go. In less than 10 seconds, we need to go.
Yeah, so like I said, we need to actually diversify away from oil.
Thank you.
And we need to focus on and also on the tax, like you mentioned.
We have to go now. Thank you so much, Oladipo Ajayi, Head Fixed Income and Forex Chapel, New Denham. Thank you for your time.